Welcome everybody to Sachs Associate Investor Panel. I'm Boris Peaker. I'm one of the co-panelists here. I'm a biotech analyst at Cowen. I primarily focus on mid-cap biotechs. Hand it off to my panelist, Steve, to co-introduce him.
Hi, I'm Steve Dickman. It's a pleasure to be back with Sachs. Thanks the organizers for putting this together with such illustrious investors. I'm running CBT Advisors. We're a consulting firm in Cambridge, Massachusetts, specializing in drafting business sections for companies going public on NASDAQ. We've had 88 companies go public, most recently PepGen on Friday. And let's go to our panelists and have them introduce themselves. I just see you across my screen, so let's start with Nanna.
Hi, everyone. Thank you for including me on this panel. My name is Nanna Lüneborg. I'm a general partner with Forbion, where I focus on a later stage investment fund, the Forbion Growth Opportunities Fund 1, looking at late stage privates as well as crossovers and publics.
John?
Hi, John Gustofson, Managing Director at AbbVie Ventures. We are a strategic corporate investor, primarily do a seed Series A, and focus on oncology, immunology, ophthalmology, and CNS. Pleasure to speak with the panel today.
Thank you. We'll be sticking with oncology for this panel. Roberto?
Thank you very much, and thank you for the invitation. Roberto De Ponti. I'm a pharmacist by training, and I'm actually now managing director and general partner of 3B Future Health Fund. It's a small fund, actually originated by a corporate venture fund. The legacy company is known as Health in Healthcare.
Health in Healthcare. Thank you, Roberto. Thank you for joining us today. Gábor?
Hey, thank you, Steve. Thanks for the invitation. My name is Gábor Gyülvészi. I'm a senior associate and Nextech Invest. We are a venture capital firm focusing purely on oncology. We are stage agnostic, modality agnostic, doing everything between A and crossover and public investments as well. Happy to be here today.
Happy to have you. Ivo?
Yeah, Ivo Staijen. I'm a biochemist by training. I work for HPM Partners. We have a number of funds, the largest one, HPM Healthcare Investments. It's a crossover fund with private and public equity in the biotech, diagnostic, medtech, small pharma company space, and we do a lot of oncology investments. And I'm representing the public equity side of the business, and not so much the private.
I'll try to pronounce your name correctly from now on, Ivo. So thank you all for joining us today, and we're going to try to cover a lot of ground on this panel. We have ASCO coming up in about a month. I think we're going to start, however, with capital markets, and I'm interested to hear the panel's views specifically on what it is that's been driving the market down so much. We know it's a general market downturn. It's not just biotech, but biotech has been hit especially hard. We're seeing record numbers of biotech companies reaching trading levels below cash. And that's on the one hand worrisome, and on the other hand could be the trigger for a bull market. So what, if anything, will bring biotech stocks back now that they've come down so much? And I'm going to throw it open to anyone who wants to start to opine. I hear silence. Boris, why don't you start?
Yeah, I mean, I think silence speaks louder than any of the words that we can add here in a discussion. I mean, I think part of the reason, I mean, we've seen not just in biotech, but across tech area, where anything that's not profitable or where it's barely profitable, or there's some, even risk to margins, that tends to sell off a lot more than more established and kind of more profitable firms. So I think in biotech, we just have an overrepresentation of firms that need capital for a prolonged period of time. And so that's probably what outweighs the biotech sector. What is going to be the trigger going forward to turn it around? I have no idea. I mean, you could, there's like this, their standard answers, their standard are like, okay, it's going to be M&A. It's going to be cheap enough that large pharma is going to just start buying stuff left and right, and that's going to turn things around. That's plausible. The problem with that is that M&A, even if the price is low, it still takes 6 months, or at least 3 to 6 months to do the due diligence to pull the trigger from the pharma company perspective. And so at least we're not seeing this. And then there's also the acquirer getting accustomed to their new valuation, because they look back and, like my stock options back a year ago were this, now we're not doing this deal, right? Until there's a level of desperation, like, well, forget about where it was a year ago, right? So there's a significant delay enough period where the acquirer needs to get accustomed to the new price, and the acquirer, the large pharma, let's say, would have to get over their due diligence process. So that could happen, but that's a slower term process. Beyond that, it's just a question of sentiment. I think that it is just impossible to predict. And, interest rates and whatnot is important, but it's just investor sentiment.
Yeah,
But,
I would take that.
John.
Just maybe a little more specifically, not talking about the broad market in general, because I obviously am not qualified to predict that. But I would say within the biotech industry, the one thing that kind of that Boris hit upon is the valuation. I do think the valuations were getting out of hand. I'm seeing, 50 million things, a 50 million seed investment, which is just kind of crazy. It goes against it. So I think the valuations have gotten a little bit high. We've obviously got supply chain issues. There's a lot of geopolitical stuff going on that's driving the market. But I would say valuation has been going higher and higher. And I think we're just starting to see, hopefully it's soon or, not too long, but a correction going on, which is inevitable. You can't keep growing forever. So, I mean, that would be my kind of more specific to the biotech industry, which may also apply to the broader industry. But that's just kind of what I think is the valuations have gotten a little high. There's a lot of pressure on it, geopolitical, as well as the supply chain issue due to COVID has definitely hit. I could go on for a few other things, but those are two of the main things that I look at that have been putting pressure on it.
John, I agree with you. I think
Yes, please,
some of the
Roberto.
valuations that we are looking now was actually generating 1 year ago, 2 years ago. So there is a wave which is coming, and now it's adapting a little bit. So this is one factor. What we can do with startups, with small companies, into making this more attractive, I don't know, but just being creative. There have been examples, and we have been working on a few examples like this. Is to think about merging two small companies together and getting synergies, leveraging their key platforms in their areas where they are, keeping the excellence that they have, putting it into a network, but then actually, compensating each other, increasing the pipelines that they have, increasing the value of their platform. This could also be a creative way to be more attractive for these companies.
That's a great idea. I wonder how easy it is to execute. I know, Nanna, you work with a lot of late-stage private companies. How easy are those mergers to do?
Yeah, not easy at all, I would say.
It's not. We have done once, and we have tried several times.
Before that to happen, we have to have a bit of quiet in the market, right? And that's what we don't have. Even today, as I look at my screen on the other side, I see the sea of red. And the problem from my perspective as a public equity investor has been that there have been too many IPOs of too early companies coming to market, and then many IPOs were successful in raising a lot of money, but of course the burn is high. Money is getting more expensive in the future, and then all the readouts that they've had, or most of them at least, have been bad. They have been disappointing, which is not surprising in early stage development, right? So this has just created the opposite of the virtuous cycle, if you will, that we had 2-3 years ago. Now we are in a vicious cycle, and it remains to be seen how we get out of this. That's basically my 2 cents worth of where we are now. And I do think that M&A would help, but M&A is only going to happen on the larger part of the market, I'm afraid. So maybe Roberto is right that some of these companies need to band together. After 1 or 2 years, these companies will all have to come back to the market to get new money in. And I don't see that happening the way the things are at the moment.
Well, I guess maybe Ivo, building on your question is when money was easy over the last few years, I feel like internal prioritization almost didn't exist in terms of projects to invest in and not to invest in. Obviously, we hear just on earnings call right now, a lot of companies coming out and saying that they're killing various programs, they're doing some headcount reductions, but they're really being forced to think about where the priorities really lie. I'm curious, anybody in the community, in the group here, can comment in terms of working with their own portfolio companies, how that is evolving, and what would that mean? How many programs are going to be kicked to the side? How are companies thinking about portfolio optimization?
Yeah, I would say certainly from what we're seeing in our portfolio companies that have platform technologies that have a deeper pipeline of preclinical and discovery stage programs are being much more active on the business development front, and that makes all the sense in the world, of course, when equity capital is less available, to seek other ways of financing the business and seek other ways of really meaningfully extending their runway. And I think actually in oncology, that's a really obvious focus. Obviously, it depends on the nature of the company, but where it is an antibody discovery platform or other platform technology, that usually lends itself pretty well to that. So I would expect that we start to see a lot more collaborations, out licensing, co-development deals over the coming year, as companies start to get more creative about financing their companies.
Maybe I can chime in here as well. Nanna, I fully agree with your assessment. This is what we see as well. Mostly we invest into platform companies, and they try to kind of weather through this storm by establishing collaborations or licensing deals with bigger pharma companies. And maybe just turning back a little bit more to M&A question, I believe we will see way more licensing deals than M&As. Because why would a pharma company take a riskier set in when they can get the same at a cheaper valuation, at a cheaper price? So I believe M&A, there will be no flood of M&A in the near future. We rather see many more collaborations, licensing deals between biotech and pharma, and that will potentially dominate the landscape. And unfortunately, might not really change the sentiment, because people will just say it's another kind of add-on collaboration, but not transformative. At least that's how we see a little bit the landscape out there at the moment.
But I think it will be able to sort the wheat from the chaff, if you like, in terms of sorting out which companies are going to be able to manage through the next probably 2 to 3 years without necessarily having to go out and do a major financing. Yeah. And if you can't do that, then probably, it's going to be much tougher.
Yeah.
I got to follow up here. I've got to follow up. That's the lifeboat question, Nanna, are you trusting the markets to do the lifeboat process for your portfolio? That is, anybody who can go and get an outside deal and not raise, we're good with continuing to support you. But if you need more equity capital in the absence of outside licensing fees, you're on your own.
No, I wouldn't say that's the approach we take at all. I'd say, for most of our companies, we would look to support our companies unless there was negative data that had caused us to lose faith in the underlying investment hypothesis. I think we would think about, instead of raising a large externally led round, then doing an insider round, and try to form syndicates where that's going to be possible. So I certainly wouldn't say, you have to raise outside money or else.
Well, Steve, can I just go back to a second?
Yes, John, please go ahead.
I'd like to just go back to, because we're having these conversations, how are you going to survive in the prioritization and is licensing an option? And we've been in such a great market and the capital's been flowing so easy, you haven't had to think about this. Mm-hmm. But if we go back to kind of traditional biotech, a lot of times you had to kind of license away your first baby to get the upfront to then generate, if you had kind of a platform type of situation. So I think we're just kind of swinging back a little bit more to normal, where you can't have it all yourself. You're going to have to do a little bit of licensing, and you'll be judicious with that money to really drive kind of your next programs forward. That is traditionally how biotech, until we had the crossovers who were coming in at, I'd say, Series B and getting you out right away, who I think more Boris and Anna, or someone had said earlier, people were getting out so early. The crossovers have receded now, and I think we're just kind of going back more to the center, a little bit what I would say more normal. So, good companies will still be able to do good licenses and generate data that will go public. But I do think, licensing is definitely something they should be thinking of now, because that's kind of how we always did it beforehand, particularly for the early stage companies. That's how you survived.
And actually offers also a very good validation of your platform, right? Because if you enter into a licensing with a big company, well, okay, apart from the cash and whatever, but the real intangible value is that you're getting attention because of this, just because of the validation of your platform with the licensing deal.
Yeah, it was phase 2. You had a phase 2 or phase 3, and then you had to have a pharma collaboration. Now you're ready to go public and get some crossovers. I just think we're switching back maybe a little bit more to those days.
I think those licensing deals almost become table stakes, where the companies that don't get the licensing deals, back to you, Nanna. I mean, Forbion has, fortunately for you, just raised a big fund. So there's no issue with capital within your portfolio. On the other hand, every time you do an insider round, you need to get consensus across the other investors or force them out, pay to play. And I wonder when you think that's going to be difficult. That is, do you see other investors who have not been so fortunate in raising funds starting to be cautious about reinvesting in their portfolios? When is crunch time?
Not yet, I would say, but I also think we have had an unprecedented environment in terms of fundraising, right? I think, the latest data shows something like on track to raise almost 100 billion in private venture life science funds over the 3 years, including 2022. So that is a huge amount of capital out there, fresh capital out there looking to be deployed. Forbion is fortunate to be sitting on a large fund, but so are so many of our competitors and colleagues. So I think there's plenty of private capital out there for the interesting stories.
Ivo, Gábor, similar views. How does it feel to you?
Yeah, very similar view. We really see no lack of capital flowing into biotech companies. There are some investors becoming a little bit more cautious, and they try to push through towards kind of bridge financing in a way, get a pharma deal, extend runway a little bit, or cut here and there. But at least in our portfolio, we will be able to finance our companies till the next value inflection point. Should not be an issue. At least we haven't seen it so far, luckily.
Well, Nextech, you wrote the lifeboat into the fund agreement, right? I mean, you really did think of it that way when you raised the big fund. Nanna?
Yeah, I do think the pace of investment will slow down, right? I think people are going to be more cautious about, rather than deploying as fast as possible to raise a subsequent fund. I think there will definitely be a bit more moderate, and people will be taking their time to select deals, because it's going to be less frenetic investment pace. So
I also think that the whole investment will be structured differently now. I mean, we already see valuations on the private side coming down slowly, but that's basically because people are adjusting to the new situation of at least a temporary lack of capital for biotech companies. And then you also have to think about what happens after the investment, right? Are you going to be able to do your crossover round and then flip public 1 month later? No, that will not happen anymore, or very rarely. So what kind of round are you going to bring together? And are you going to call it a mezzanine round, or is it just going to be next round? And you have to plan longer term, and and maybe also do more deals if they make sense for you. So it's a complete reset of the situation for me, to 2009 or 10, or maybe most of you were around already, 2004 or 5. Yeah. And of course, I'm more on the private side of the business, but I see all this happening on the private side. I'm on the public side, and you cannot just look at the public side of the market and just completely ignore what's going on there for the private side. So.
A question, I guess, for the venture capitalists at number of you, are you putting pressure on the private companies to focus on 1 or 2 key assets and put everything else aside, or are you still okay with them investing in some of their longer term pipeline plans?
At least for us, we do look to a platform. We do look to a pipeline in different stages of development. You can do this. We very much prefer having a backup, right? I mean, you don't know exactly what's going to happen in the future, so it's very good when you have a platform and a pipeline. Of course, you prioritize, so you kick off the bad stuff and keep the best one.
We do somehow similarly, because we invest mostly in platform companies, and we were fortunate enough our companies were fortunate enough to raise enough capital so they can have cash for the next 2 to 3 years. And we want them to expand the platform, to build on that platform and take the full potential of that platform to create their portfolio and their portfolio should not be consisting of 1 or 2 programs, but a couple of more programs. But Roberto, I fully agree with you that the bad ones should go and only the valuable ones should remain in the portfolio. There's a normal attrition of.
And from my perspective, I think my private colleagues are already having those discussions, but it's not something that they have to press upon the management teams or the boards of those private companies, because they've already noticed what's going on, and so it's not no acrimonious discussions or anything. It's already happening. I mean, we've been in a bear market for biotech since more than a year now, so everybody's gotten around to it now.
Boris, would you agree? You cover the public sector very closely. Is that what's happening in the companies you're covering?
Yeah, that's why I bring it up. I mean, I hear it on earnings calls, and this is just recently, I think, started more broadly as maybe initially maybe some 4Q calls for last year and 1Q earnings season that we are in right now, where companies are making announcements on killing programs or putting them on ice. And I'm not even talking about situations where you have a major failure or anything like this. This is just a project that we thought would be kind of ongoing, and they're realizing that, you know what, if this is a year or 2 from IND, right now is not a good time to invest in it. Or even if it was supposed to go into IND now, let's just focus on the 2 or 3 things that are more advanced. And yeah, so that's why I bring it up as a question into the private area.
I want to ask you about the impact of public markets on the way that the privates are operating. We've been talking about this a little bit. One of my buddies in venture capital recently compared it to being in a submarine and realizing that there may be a hurricane happening above the surface, but if you're in a submarine, it kind of shouldn't matter to you, and yet somehow it still does. And that's my question is, does it matter? I mean, one of my thoughts was shorting the launch. There are all of these great companies going out and getting data, getting approvals. Legend got approval and immediately the stock plunged. So is that dynamic of even good companies being punished on the public markets somehow translating back into the privates?
That's not what we're seeing, at least. I mean, it very much depends on the area, but I think I'm kind of choosing to be the optimist here. But I think we will see an increasing number of biotechs launching their own drugs, and probably doing so more successfully than what history has foretold. But also because I think our whole industry is becoming much better at defining very much more sort of niche, either genetically defined or orphan disease populations, etc., where that's a much more tractable exercise. And I think there are also some success stories out there, right? I mean, argenx is launching their first drug and is doing a fantastic job of it, right? So I think that there are exceptions to the sort of short the launch rule. And as I think the opportunity for us in both private and public market at the moment is that now there are actually some pretty attractive investment opportunities of companies that have approval within the horizon of the next financing event. So then they suddenly become much more kind of real businesses rather than simply cash burning biotechs with years and years and years of R&D burn ahead of them.
A green shoot, very nice. Maybe we should move on from financing for a moment. And Boris, shall we switch to FDA?
Sure, happy to jump into. So I focus a lot on oncology, and one of the regulatory developments in oncology is Project Optimus. There were a 2-day panel last week. And the goal there is to focus on dose optimization in phase 1 studies. And there's a kind of concern from the FDA that maximum tolerated dose may not be the ideal dose, and they really want the companies to explore dosing before going into larger trials. I guess we'll just open it to the panel. What do you think about this new approach? How do you think it may be codified as regulatory guidelines? And how are you advising your companies to think about dose optimization in phase 1 studies? I don't know, maybe Gábor, you said you focus on oncology specifically, so maybe.
Right. I think Project Optimus is a great initiative from the FDA, because luckily, pharma and biotech industry, they were able to create drugs which really prolonged the lifespan of many patients, and cancer became a disease you can live with. So for that, to live with that disease, you need drugs as well, which are more benign, and they don't have such a such a strong side effect profile. So I think the FDA is trying to find this balance where you have a great activity of a drug, but you can tolerate it for a very long time and becomes kind of a chronic administration with a very tolerable safety profile, with a side effect profile. So I think it's a great initiative. The problem which I think biotech will perceive with this initiative is that phase 1 development will become longer, slightly longer, and more expensive and more complicated. But at the same time, probably you can save some cost and energy when you enter into phase 2 and later stages, because your drug is better characterized, and not only the safety, but really understand the safety, efficacy, correlation, and the PK, PD is better correlating. So I think that's a good initiative. We still have to see how it evolves and how it works out, but we see it among our portfolio companies as well, that they get this guidance from the FDA, that they rather focus on a lower dose, which is highly efficacious, but better tolerated by patients.
Gábor, I wholeheartedly agree with you. I would only add to what you said that sometimes it's very useful with the regulators to discuss adaptive design, and really depending on what's really, the results that you're getting, you can adapt to the best for the patient and also for the efficacy. The other thing is that FDA initiative is great. I would love to see this more expanded, because there is not FDA only. So this is something that should fit, for example, ICH initiative on a larger base, so to expand and extend on a worldwide basis, this kind of optimizations.
How much do you think it has to do? So there's obviously the element of chronic, more longer-term treatment in cancer. The other is maybe novel mechanism like immuno-oncology, because historically we used to dose up to maximum tolerated dose, and that's based on chemotherapy, right? And it probably still applies to things like antibody drug conjugates, or drugs direct acting on a tumor that have come with this chemotherapy in nature. But for immuno-oncology drugs, where it's a complex mechanism, do you think there you need to explore more dose just because it's a novel mechanism, or what is the rationale for dose optimization in immuno-oncology, I guess?
I mean, I think a lot of IO companies are already doing this, right? They're already doing quite sophisticated mapping of what is the cytokine profile they see in response to different doses, and are actually also even publishing some of this data, right? So that others, competing companies looking at the same targets, can potentially also learn from this, and the field moves forward quicker. I feel like for a lot of the IO, particularly like in the bispecifics, for example, where you have to also balance the activity of the two different arms of the molecule. I think a lot of biotech companies are already being very thoughtful about really looking at biomarkers to understand what is the activity generated by either active part of the molecule, and how can that help them to optimize their dosing strategy.
Anybody else want to chime in on that? If not, maybe.
Yeah, Boris, I'm happy. I would just say, just in general, I do see a lot of biotech companies, and we all sit on the boards, and we understand the pressures we're putting on them to drive, get into the clinic right away and get good clinical results and go into phase 2. And I do think, but you do need to have the right dose. We probably all have a few war stories where they had, they got phase 1, they got enough safety data they want to go for, but now they're going phase 2, getting ready for phase 3, and they really don't have the optimal dose. So I do think, taking a look at this earlier and better and a little more thoroughly is a good thing, because we've all got companies that probably could have done a better job. And in the end, it's really, you got to think about the patient. What are we putting these people through? If you could optimize the dose to make it more patient friendly, absolutely, I think we should be spending more time on that.
And ultimately, sorry, maybe just one.
In the context of IO, if you're probably going to combine your IO agents with another agent in the future, so just do more work up front, PK/PD, look at the dose response curve on your activity at least, and side effect profile, and yeah, it's worth spending a bit more time. But it will make it more costly, indeed.
And maybe just one last comment on this. Definitely, you have to spend more time here because in IO, most of your targets are moving targets. While in targeted therapies, you have a well-defined oncogenic driver, you know the mutational status, and you can stratify patients accordingly. While in IO, you have to go for a basket trial, potentially spend a lot of time on a signal-seeking exercise. So you have to explore more doses, more combinations. So that's just a more difficult one, but it's worth the time spent on those findings because that might translate to better efficacy later.
Got it. Maybe sticking with the FDA, there's been an increase in complete response letters from the FDA, and particularly for drugs with breakthrough designation. I don't know if there's a theme across all of them. I mean, there's maybe curious to kind of get the panel's take on that. Or maybe, you know, flipping around it, what are you learning from it in terms of with your own companies to avoid that in the future? Because from a public investor, I have to say it's very frustrating, right? You don't know, obviously, you ask management all the time, is your manufacturing CMC okay? Have you done this, that, and the other thing? And it's always like, everything's great, everything's great, everything's great. Oh crap, we got a complete response letter, right? There's no way to even probe and kick the tires on anything that could drive to that.
No, it's very important to be very objective with the data that you have, and I think it's just a case-by-case story. I don't see myself a trend. We have done this successfully, and it really depends on the data you have and on an open discussion. CMC is always something that. But like many other things, you could be surprised. I think my key point here when I'm discussing with the companies is that you do not have to have unexpected outcomes. So you should know your risks. So if you know your risks and you discuss openly with your investor, it's a much better story to tell when the things have to be replanned in order to answer the FDA request or any other regulatory request.
Maybe just, I think it's very unfortunate, obviously, for patients, all these CRLs and setbacks in the biotech and pharma space. But ultimately, every time we learn and our portfolio management learns something from these, and they can adjust strategy. And we often go back to our portfolio companies and ask them, so do you follow FDA? Do you have a regular interaction with the FDA? Do you really understand what they need? How you have to develop those drugs in the clinic? And that's extremely beneficial for us because we see and we can push our portfolio companies management to really follow guidelines and kind of have a constant interaction with the FDA.
Got it. Maybe let's move on to something that generally we used to not talk about in earlier stage development, but maybe drug pricing. And we saw an unprecedented pushback on EduHealth from payers. Now, that's not in oncology, obviously, but it's still an important large drug that was supposed to be a multi-billion drug with kind of marginal efficacy, and that pushback from payers in Alzheimer's, it really derailed the drug. Do you think similar dynamics may develop in oncology, particularly for drugs with only single-arm data, or would we be perceived as a relatively marginal benefit?
I think it's much harder in oncology, both for kind of political reasons. Oncology has much more public pressure, I would say, for lack of a better word, than potentially treatment for dementia, even though it's something that affects so many people. And also, I think in oncology, increasingly, we're developing new oncology treatments for very well-defined, much smaller populations. So the overall impact on healthcare budgets is just completely beyond comparison to AbbVie.
Maybe just as well add here, I think this is happening in certain cases in the oncology as well. Maybe just take one example. If you look at Lartruvo from Lilly, which is a PDHFR inhibitor for soft tissue sarcoma, actually that received breakthrough therapy designation, fast track approval, and so on and so forth. It got approved, but the confirmatory trial failed to show any added benefit to the standard of care when it was compared to. So ultimately it was withdrawn from the market. So I think the market just selects out what is valuable, what is not valuable. And companies should just run those trials, and they should be forced, maybe as the FDA guides, like they have a registrational trial, which is composed of 2 elements. they use kind of like the PFS ORR as a kind of a potential option for fast track designation and kind of accelerated approval, while the OS will be the final approval for the same drug. But they are forced to run that in one trial, these two parts. So I think this will be important for oncology as well.
That's a very high bar.
Well, I do think, this is what I love about this industry. We're in an industry where everything has to be superior and better than it was before. And now we're just not talking about safety. You've got to show tangible benefits. So you have to have the biomarkers, you have to have, you've got to show tangible benefits. And not always easy to do. So I do think, oncology has been doing a pretty good job with that. And as we all know, the physicians who are treating the patients are highly read. They're reading all the data coming out, and they know exactly what benefit is this really going to give, and do I want to do this? So I think that's what I love about the oncology industry. It's the physicians are well read, the patients are pretty well read, and you really do have to demonstrate significant. I would say, just incremental is not going to get it. And I think most people are fairly savvy about that. So that's one of the things I just love about this industry.
Boris, shall we switch to CAR T and cell therapy?
Go for it. Absolutely.
It's a good transition point because it's a perfect case where in the initial data from CAR T, from Kite and Juno, we saw dramatic improvements in response. And yet, look out a few years, it's now about 5 years later, there haven't been significant sales of this product category across the whole cell therapy landscape. There have been some great data points. Most recently, Nkarta has shown some excellent data for NK cells. But I'm asking the panelists, you're seeing this in your portfolios and investing in new cell therapy companies every day. What's the sentiment about cell therapy? What's the analysis about the disappointment from the first generation of CAR T?
Well, I would just say, a couple of general themes on this is we learned that there is a lot of dollars that have to go into manufacturing. From a venture capital point of view, when we're deploying money, I never thought that we would be deploying into, bricks and mortars just to manufacture the stuff. So then that moves us, let's do off the shelf type of therapies. We haven't really seen much that's been highly successful with that. And we really, I think, need to drive to, more easier manufacturing, drive the cost of goods down, as well as it's got to be off the shelf. Patient specific is fantastic. It will work, but universally, when we're trying to treat everybody, it's really difficult from a supply chain and pricing point of view. So we just haven't seen as much yet from the allogeneic. And I think when we have those breakthroughs, it's going to be great.
I can add from the perspective of a small fund like 3B Future, we have decided so far to not be into this specific area. We are strategically targeting it, and we do have the competencies on board, by the way, very good. But again, it's something that we have deliberately not done because it requires a bigger structure, bigger muscles to be done. I absolutely agree with John about the manufacturing, and maybe it's a good idea here is to invest into CDMOs so that you invest into this and you pick up the best from the biotech.
I have to say, I think this area is tough, particularly at the moment, unless you have a fairly a late stage product and a company or a syndicate or a situation where you really think that this company can take this product to market, because who's going to acquire it and how are you going to take it public, right? I mean, I think you can't come up with very good answers to either of those right now for these types of companies. So I think, I think it's a slightly tricky investment proposition in the current markets, and with the current lack of M&A in the space as well.
It's just fascinating because this is a case where there were clear improvements on standard of care. So from the patient point of view, it looks like it could be a big win. But from an investment point of view, especially the bricks and mortar, it has not been at all a win. In fact, the opposite. So it leaves the industry in a tough position. It's like, wait, you know the cure for cancer and you're not developing it?
Yeah, but it's not just, it's also the duration of efficacy of these CAR T therapies that turn out to be, mixed, some better, some worse. The way to administrate CAR T therapies is still cumbersome. To manufacture them even, always takes 2 to 3 weeks with every company, but if I talk to doctors, they say it takes 3 weeks at least. And then, some patients don't, there are all kinds of problems in the manufacturing. Yeah, that's actually not something that a venture company can finance, all these huge, buildings and tanks and whatnot and bats. So yeah, the whole model is a bit broken. And if you look at the past, Kite was bought for 11 point something billion, I think, then Juno for 9-ish, and Legend had a market cap of at the top of $8 billion. Now it's below 5, I guess. So yeah, I mean, the market is telling you something, right? I mean, it's a difficult business, and I agree. Allogeneic would be better in the end, of course, and that also goes for other, NK cells, which data were really very interesting.
I live in a world of stories, and I've been progressively working with each generation of stories, specifically in oncology and specifically in cell therapy. My clients have included Legend, Instill Bio, Bellicum, going back to Bellicum, lots of these companies. And my observation is that it seems that ever since Kite and Juno, we have been selling the next story as a better version of. So we're going to do allogeneic because it's a better version of autologous, or we're going to do TILs because they're a better version than CAR T, or we're going to do NK, CAR NK because it's a better version of CAR T. And I think what's tricky right now is that initial generation, the bedrock, if you will, of CAR T, it feels shakier than it did in the past. The duration of effect, as Ivo was saying, and also the number of patients who can logistically actually be treated with these therapies has turned out to be low. And that has been really challenging because it then begins to call into question that better than story that I see coming up with regularity with each new scientific breakthrough.
And the problem for us, at least, is very often that the difference is only incremental. So there's no new breakthrough in the field of T-cell therapies or cell therapies. And the other problem we see is like companies do it because they can do it. They don't have a good reason why they do it, because they can do it. And that's not a good enough reason to pursue development of a given therapy. So there we struggle a lot, which company might be the next Kite, Juno, you name it. But we couldn't really identify really so far. And maybe the last point here is really durability. NK cells show amazing activity early on. The question is whether you will have that kind of cure for long term. We don't know that yet. When you look at certain publications from CARs and they follow patients like CLL patients over a decade, what you see that CD4s and CD8 T cells persist in the body, but not NK cells or gamma delta T cells. So I'm still very hesitant to assign significant value to NK cells, gamma delta, or other type of cell therapies outside of the T cell field.
The market has combine T cells and NK cells, so TCRs and NK cells.
Yeah, that's a potential option. Yeah, coming back to IO combinations, cell therapy combinations, it's a way forward potentially.
Totally. They're working on it for sure. But the market generally has agreed with you, Gábor. The market has basically said, let's not put too much capital into the gamma delta T cells. I've worked with two of those companies, Adicet Bio and Innate Bio, and Adicet has done better on the market for sure. They've both had interesting clinical responses. These are clinical stage companies with patients who are really months and months beyond their expected, lifespan. So in some way, it's very promising, but we haven't seen, and this is the other question, scalability. So, gamma delta T cells, it's a very specific recipe, and it's not so necessarily easy to translate into large scale. It's not like manufacturing a small molecule, not by a long shot.
I've looked into those, and that's the very first question I ask is like, Gamma delta is what, somewhere between 5-8% of your total blood cell population. Then you've got to expand that out so enough so you can have a therapeutic effect. Again, you're getting into how am I going to expand these cells, drive them. I think they're really interesting cells and have a lot of potential. No MHC and a lot of activity you could drive, but how do you get enough of these cells to have a therapeutic effect for a patient? And again, it goes down to, is this going to be patient specific again? Am I going to have a very big cost center where I have to do that? And it's going to take a lot of time to expand these cells, or can I do it allogeneic? And I still haven't, kind of comes back to all the conversation we were just having. I still haven't seen anything. I think they're really interesting cells, but until you solve that manufacturing issue, you can get it out there to a lot of people. I don't see them any superior than any other type of cell. But I'm rooting for them. I kind of like that, the gamma deltas.
Interesting. Me too. I won't resist the temptation to draw the parallel to gene therapy. Cell therapy and gene therapy have evolved in really lockstep. And we've seen a very similar downturn in sentiment with regard to gene therapy. With the crash of the early bluebird therapies, the fact that they got approval and couldn't get reimbursement in Europe, etc., it set up that industry, also the gene therapy industry, for a big fall. It's been a very tough year for gene therapy companies. And I would just say there's a strong parallel there. I will then push forward past cell therapy. We have a few minutes to go in our interesting discussion. I can't resist asking about TIGIT and other checkpoints, because we're all hoping for more checkpoints. What's the verdict from the panel? Is TIGIT a real checkpoint, and are we going to see any other checkpoint, or are we stuck with CTLA-4 and PD-1 and PD-L1, etc.?
Oh, we just had the LAG-3 approval, right?
Thank you.
So, and I do personally, I do expect TIGIT to have a beneficial effect, from most immediately in the hands of Roche, I guess. But like with many other effects of life, you have the biggest punch first, and it was PD-1, PD-L1. I should correct myself. CTLA-4 was first. It turned out to be a bit too toxic. Yeah, I mean, we're not playing the big pharma game. So and from my perspective, IO has become a big pharma game. Really. Every big pharma tries to get its own pair of PD-L1, PD-1 antibodies plus concomitant therapies in the clinic. Yeah, there was an article, an editorial written by Pasder in New England Journal a month ago or so, where he lamented that everybody is just trying to copy. All the big pharmas are trying to copy each other with getting their own sets of IO antibodies in the clinic and on the market, and not so much working together, trying to really identify new IO targets and IO antibodies. So I thought it was interesting.
I want to hear from Gábor and John on this. Gábor, you look at these every day. Are we ever going to see another good checkpoint?
I hope so. Whether it's TIGIT, the next one, I'm doubtful that there, but I like 4-1BB and CD28. We know that both work. We know that they are extremely toxic. So whenever anybody can tame those compounds in a way that they act only in the tumor or at a given location, that will be a breakthrough for really patients. But there are so many approaches out there, so I doubt that nobody can really crack that problem. So I expect that we will see that in the next, not 1 to 2 years, but at least 5 years, to have a compound which is efficacious and not toxic and very well tolerated.
Well, I think statistically, no matter what happens, you're correct, because there are thousands of various studies ongoing exploring novel mechanisms. I don't even know how many thousand. So just by random chance alone, some of them should look encouraging. Whether that's going to get confirmed in future studies, we're just going to have to wait years to be disappointed maybe. But we are going to have successes just by the nature of number of studies that aren't going.
But hopefully it's not only random, because I would assume that scientists are smart enough to design a smart study as well and the smart compound as well. So hopefully it's a combination of being smart and just a big number game.
Got it. So we have about 5 minutes left, I think, in terms of time. Maybe we should go around and ask what investors think about the rest of what the key themes in biotech are going to be, maybe for the rest of this year, maybe for the next 12 months, let's say, the rest of this year and early 23.
I'm happy to go first. I would say in immuno-oncology, I think it's very much still about bispecifics and trispecifics. I think there's such a plethora of super exciting targets, combinations of targets in clinical development. Quite a few of those now in sort of getting out of phase 1-2 and getting into expansion cohorts, so we'll start to see more meaningful data. I think some of those could be taking away some of the opportunity also in the cell therapy space by essentially having bispecifics do almost the same as you would have with a CAR T. So that's the area that I continue to be watching with a lot of interest.
Okay, we go for bispecifics.
I would just say in general, kind of more just in a general new target identification. I see a lot of companies and they still going after some really old targets, and I am always looking for companies that have platforms that can do new target identification. What I learned about immunology when I was back in school, it just doesn't even seem to apply anymore. It's changed so much on its head, and I think, and we still are far away. So new target identification, and kind of how we're getting it into the tumor, and there's a lot of stuff in there that we don't know, and that's what I'm really excited to see what we find out about.
Roberto?
Yeah, and I agree there is a lot on the pharmacology that we still don't know. Some of the reason why someone is responding or not. We are investigating this with some of our companies right now. We are investigating also DNA mismatch repair and new targets as well. I think that's the key, and combinations also will continue a lot, I believe, and this is also very important to understand what your new product is actually going to be together with others.
Thank you, Gábor.
For me, what's exciting it will be to see how these conditionally active compounds kind of spin out in the clinic. Like, there are so many ways now to conditionally active your antibody or different type of molecules. And I just want to know which one is the winning approach there. That will be exciting to see from clinical data.
There are a lot of those.
Yes, but we don't know which one is the winning approach. Probably there are more than one, but nobody really knows. And just it comes down to bispecific, to cytokines. There are so many molecules you can use or targets to engage with. So that will be exciting to see.
Ivo?
I totally agree with Gábor and also Nanna. I mean, I'm excited by these agonistic antibodies and antibody formats that we now finally see reappearing, basically. I mean, we once had a CD28 antibody that didn't go so well, and we have had a lot of antibodies in the OX40 space that didn't go so well. But I think with better science now, better clinical experience, better protocols, I think we can pick out these agonistic, IO markers that not just inhibit cancer growth, but actually, kill the cancer cell if and when activated accordingly, of course. Yeah.
Boris, closing words?
I would agree that I think that in the IO space, I think to me, but I'm somewhat biased because I focus a lot on it. And so it's not giving a wholly perspective on the entire biotech field. But I do think that in the IO space, there's so many novel targets, from multi-specific antibodies to various cytokine approaches, to various novel mechanisms that we're better understanding now than we did in the past. There's some still challenges. It seems like it's a lot more difficult to develop agonist than antagonist. There's a lot of question of dosing agonist versus antagonist. So there's a lot of things still to learn, but it just seems to me the opportunity to impact disease course is greatest with some of these novel IO therapy, whether it's combining NK cells with some of the longer lasting duration therapies or whatnot. It'll take a little time, but I think we are gonna find what we will view as revolutionary approaches going forward.
I share your optimism. It's a rough patch. We will come out of it. Thank you so much to the panelists. Thank you to the organizers. We're looking forward to seeing this go live.
Thank you, everyone.
Thank you.
Take care, everyone.
Thank you. Take care.
Bye-bye.
Bye-bye.